fortunate to have Adam Grimes with us. I've been to his website. So, Adam, welcome to F.A.C.E. I'm going to make you the presenter and look forward. I'm not sure that I've interviewed you before years ago on FX Street. Maybe you could straighten out an old man and tell me if this is a repeat of you and I talking to each other.
Good morning. How are you guys?
Good, Adam. How are you, buddy?
Good, fantastic. Cannot complain.
All right, Adam, you and I never did this before, did we?
We never did this. I think I did. Gosh, you know, I apologize. It's been a few years, and I have trouble remembering what happened last week sometimes. But I think I did more like a planned formal webinar presentation for you. But okay. So I don't.
Okay.
Don't remember the details.
So we're seeing a representation of your mood. I have a black screen right here.
No, actually, I don't really know. Let me see.
Yeah, share the screen, and then you pick the device or monitor you want to show. And,
yeah, I have. I think that I'm just trying to figure out what will be, because I don't really have a live screen that's set to share for webinar, but I think I can share like a SIM login here. Give me 2 seconds. I'll pull down from another computer.
Otherwise, as we're talking about the markets, I could show them and your website as well. So why don't, as long as we're out there in the ether, okay, there's a look.
How's that?
We have on crude, beautiful.
Good.
All right, so Waverly is a newsletter that you write?
So yeah, I have two current projects, and it's good to talk about them because they may look similar, but they're actually very different. So I have Waverly Advisors, which is, as you said, essentially a newsletter. It's actually an institutional retail. I'm sorry, I'm thinking too much. Here, I'll show you. It's an institutional advisory product. So you can see here we go through basically a review of what happened last week, major markets, and then talk not just, of course, about news, but about setups, predictive value. Right. We're looking across everything: stocks, currencies, futures. Waverly has a very heavy focus on futures and on volatility. So that is my, if you want to read in a very concise way what I think is going to be happening in markets, Waverly's the place to find that information. That's Waverly Advisors with an O.com. Okay. My other project which is pretty new, we just launched the last part of last year, is marketlifetrading.com. And that is explicitly educational. And one of the things, you know, we can talk trading, we can talk life and philosophy and all this other stuff too this morning if you want. But one of the things I've really realized over the past few years is just how much I enjoy teaching and how much I have missed teaching, because as I've been focusing on building Waverly, I have not done a lot with individual traders. You know, my focus has been more institutional, and also, you know, throw in the mix, frankly, how bad a lot of the trading education is. My first, you know, my first few years trading, I
wanted to get there. So, yeah, who did influence you? And tell us a little bit about your bad U-turns.
Well, yeah, so I think in some ways I like to joke and say that I am the unluckiest trader ever, meaning that there has almost never been, over the course of thousands and thousands of trades, because I was an active day trader for a while too, there was almost never a point where I did something stupid and got lucky. And there were plenty of times that I knew I was doing something stupid, and but it never panned out for me that I got lucky doing the wrong thing. And I think, you know, in reality, that was actually a very good thing, because I see a lot of people now who have, you know, they're working a system without an edge, or they're taking unrealistic risk, or, you know, they just get lucky and they have that powerful learning experience, so they kind of anchor to it. My first couple years, I've started trading in the mid-90s. I graduated from college and really did not know anything about markets. I just kind of stumbled into it. I'm a little embarrassed to tell you, I got something in the mail, a guy with a cowboy hat. Some of you.
Oh, Ken Roberts.
Yes, you may remember. And I knew that trading.
One, two, three bottoms.
You got it. Yeah, and you know, I knew trading could not be that simple, because you know, the irony of this is that I today do use pretty simple patterns that would be, you know, on some level kind of in line with what Ken was teaching. But so I had the experience of, I opened a very small futures account, and back then paid about $100 a round turn, by the way. So as we're thinking about, you know, how commissions have changed, and that was high back then.
You know, now I know where I remember you from.
Where?
I was your broker. That was a discount commission.
Oh, goodness. Well,
you know, for all the expert market timing, it was worth it. You know, exactly. You want to hear something funny, Adam? Yeah, I don't know. I'm in a little bit of a goofy mood, but, you know, I was a broker and I did have my own IB. And when people would bring up commissions, I would say, it's not how much it costs you to clear a trade. It's what you clear on the trade.
Oh, that's right? Great. That's
but you
great.
know what? But, you know, it does matter.
Yeah, it does matter, yes.
That affects what you clear on the trade.
Yeah, anyway, it certainly does. Yeah.
Go ahead, buddy. Thank God I've changed. You know, I repented, buddy.
Well, you know, it was so I had the experience of opening a few small accounts and just churning through them very quickly. Had no clue what I was doing, and I made a lot of the you know, I shudder when I think about the kind of leverage that I was using, and I had no idea. You know, and I did the classic making mistakes by, like, I was short and, you know, I sold more to get out of the trade, which does not really work. And so I made those mistakes with relatively small accounts. And there was something, though, even though I was not really pointed in the right direction, there was something about the process that was really very exciting. You know, I just had the experience that a lot of things clicked here, and I knew that it would be worth trying to figure out. And I'll tell you, you know, talking about brokers, it was actually my experience with brokers that really set me on the right path of learning, because I had a broker that called me one day and said, okay, so you have a few $100s left in your account, and I've been talking to the guys on the silver floor, and they know exactly where this market is going. You know, the floor knows everything, of course, and so we really think you should buy these calls. And oddly enough, we found this strike that would exactly, you know, your account would be your full account value. And I said, the guy was just kind of an irritating salesman, and I said, well, you know, I actually was thinking about going short silver. And he said, oh, no problem, we can do a put instead. And that was where it really became clear to me that, hey, this broker does not have my best interest in mind. Like, you know, this is he's not working for me in the way that I thought. And it was also where the light bulb kind of went off, and I said, you know, he might not understand the market like he does.
Yeah, a lot of brokers are really just salesmen.
Well, yeah, you know, not just brokers, but a lot, as you know, a lot of people in various facets of the industry. And I think people from outside look at finance, and they say, you know, everybody in this field must be so well educated, must know what markets are going to do, and on and on and on. And the reality is, as you said, a lot of people are in essentially sales jobs. And so I had to develop some quantitative sense and develop some understanding of how markets moved. And I was fortunate. This was kind of in the days that early days of communication on developing internet, and I ran into Linda Raschke, who we never worked closely together, but her work and her generosity, she spent a lot of time helping correct some basic misunderstandings I had, and I don't think that I would have been successful without her help and the help of some other people who were successful. And I was kind of in the right place at the right time, and I navigated around. I started trading this. I'd call it swing trading today. I was holding trades maybe a few days to a few weeks. And again, kind of ironically, that's where I've navigated back to. But I took a decade-long diversion into pretty active day trading. And the first money I made was trading the British pound futures in the mid to late 90s. And that was, I was probably doing 5 or 6 trades a day. I was not trading the spot market, I was trading futures. And that was where, that was where I really, I was fortunate because as a retail trader with a still pretty small account, I learned what it was like to get into a market, to get into a trade with utter conviction in a trade, and then to know within 30 seconds that I was wrong and to get out of the trade. And that's a very hard thing for people to do, but when you're an active trader, that's one of the essential skills. And it's one thing to read about it, but it's another to do it over and over and over, and to see the difference, what it feels like to be right and to be wrong. And so I was
you
right
can't
place.
learn experience. You have to live through it. It only happens with the passing of time.
It's so true. And one of my other current projects, which people will be hearing more about, and I'll tell everybody how to find me and get in touch. I'm writing a book, what I hope will be the beginner's book. I do have a couple books for trading. They're I won't say they're advanced, because I don't think there's anything that's truly advanced in trading. I think everything is basics. But I think to really understand, my first book is a 450-page monster, and it's just a little bit intimidating for a beginner. It does not really take somebody from the standpoint of, hey, I don't really know what a chart is, to here's how you trade successfully. So I just a few days ago, started writing this beginner's book. And the reason that we had that diversion is because what you said is just what I was writing about last night, that you can learn all of this knowledge, you can know exactly what the right thing to do is, but until you have some experience, until you have some experience managing the emotions and just some experience going through the process, you're not going to be successful. That's part of the learning curve.
I've always believed, and I'd like to ask you about it in recent years. We know it happened early in your career, but when I would manage money, I didn't look at, what their best years were in average return. To me, what was important was what was their worst drawdown. Yeah. So to me, the mettle of the trader is how they manage the market and themselves during a drawdown.
I think.
Do you have any rules, or can you talk to that subject through your own experience of going through drawdowns and where you draw the inner strength to continue and instead of throwing in the towel?
Well, yeah, it's a very good question. I think one of the things that people need to realize, beginning traders, let's say optimistic traders, have this idea, because I was like this too, you have this idea, you're going to start trading and your equity curve is basically going to be a line that starts in the bottom left and goes to the upper right. Yeah. And in reality, every trading system I have seen has some type of drawdown. The only exception to that, I would say, would be there are two exceptions, which are both worth acknowledging because they teach us something. One exception is if you're trading with access to what is essentially inside information. So if you have access to customer order flow, if you, let's say you're the exchange and you have access to some knowledge that is not accessible to the general public, you might be able to craft a system there that does not have drawdowns. And the other one, which is a little bit of a question mark, is very high frequency trading. And in my fairly limited experience with these, I think they do have drawdowns, but you're just everything happens on such a compressed time curve that chances are by the end of the day you're going to be profitable. Right.
Yeah, you don't notice it. Huh.
Yeah. So I think that's the first thing about drawdowns is that traders need to be prepared. Not only are you going to have drawdowns, but you're usually going to be in a drawdown. That was kind of a revelation for me because once I started making some money, I realized that when I was in a drawdown, I didn't really feel very good about myself because it was all about trying. We're so competitive. It's about trying to fight back to that equity curve high and to make new highs. Of course, you want to be making more money. So that was my first observation. My second observation was that I was usually in a drawdown and I usually didn't feel very good about my trading. And then I thought, okay, so I started looking at other ways to trade and looking at other traders' performance, and it just hit me like a lightning bolt when I realized that most trading systems, no matter how you're trading, you're usually going to be in a drawdown. So that's the first thing you need to know. Drawdown's a fact of life, and you are usually going to be in a drawdown. The other thing is that you have to be prepared for. You can, of course, dial in your drawdown with the type of risk you take, but I would say, like every now and then I'll hear somebody says, hey, I want to make 40% a year, and I'd like my drawdown to be no more than 5%. And could you theoretically create a system that could do that? I probably don't think so, but if you could, you certainly couldn't do that every year. So I think people need to be prepared for probably a larger drawdown. I know we're talking in not very specifics here, but a larger drawdown than most people would expect, and just to understand that drawdown is going to be somewhat tied or very closely tied to your return. So, if the guy wants 10% a year, maybe you can do it with a 5% drawdown. If you're looking at 40% a year, you might have to sit through some years with some 25, 30% drawdowns. And it's the drawdown is very, very challenging for traders. And the sooner people wrap their heads around the fact that usually you're not going to be at an equity curve high, then it gets a little bit easier.
So, I like to use the metaphor of a quarterback who throws an interception. He doesn't come back to the huddle and dwell on it and go, oh, what a crappy play,
Not a good quarterback.
I don't know. Yeah.
Right.
Yeah, I don't know.
Yeah.
Maybe I should go sit down on the bench for a while in a fetal position.
Yeah,
He just says next.
Next play. Right.
Yeah.
Yeah.
So isn't that really the mindset?
It is. Yeah.
And isn't the other big problem is that trading less, and we were talking about this today, and being patient and waiting for trades to come to you is also a very difficult thing for people to do nothing. And to do nothing is so important because there aren't always high quality setups.
Yes, and we're going through some pretty important truths here in this morning interview.
Yeah.
One of the cornerstones of my understanding of markets, and we haven't really, I actually like that we're doing an interview and not talking that much about me. My approach is blended, quantitative, and discretionary. And my formal background is I was a musician. I was a classical musician before I was a trader. So I definitely have that, artistic side, if you will, but I also understand that trading is a numbers game and statistics are very, very important. And one of the things when you start to look at markets and you start to do statistical analysis, one of the things that you see very quickly is that so much of what the market does is indistinguishable from random action. You have to be careful how you say that because, you know, from a practical standpoint, I say that markets usually move randomly. And people sometimes will object to that because they say, well, you can't really prove that it's random, which actually is true. You know, it's mathematically, you prove that something's random by the fact that you can't prove that it's not random is basically the proof process. But if so, I accept that usually when I look at a chart, and we can just kind of pull up some charts here. Usually when I look at a chart, most of what I see is random. It helps if I can type. And if I understand that, if I see a market, for instance, like the euro here that is chopping sideways, that is stuck in a range, that is a market for me that I have no business trading that market, because why would I want to be involved in a market that is just moving randomly? And my best expectation is 0. If I do everything right, then over a large sample of trades, I won't make or lose money. Instead, my job has to be to wait for markets where I see there is, you know, you'd call it a setup, just to put it in simple traders terms, but what it means is that I see some evidence that this market is moving in a way that might be something other than random, and or might be about to, and that's a point where it's worthwhile risking money. And I'll tell you where you learn that. You learn that day trading very quickly, because you see when you're doing 10, 20 trades a day, and you're keeping track of the trades that you did for a reason, and the only valid reason is I had a setup that was in my trading plan. And then you look at all of these other trades you do, and many of you who are day trading are probably nodding your head right now and saying, you know, how many times do you do a trade because you're bored? You're punching through your pairs and crosses, and there's really nothing to do.
You mean impulse trading?
Well, so there's the boredom trade. There's also the impulse trade where, oh, it's not really a pattern, but it doesn't really fit in my trading plan, but it kind of looks like a pattern, so I will do it. There's also the frustration trade. I've just had 3 losing trades in a row, and you know, damn it, I'm going to make the money back, so I'm going to do a trade here. And in fact, I want to make all the money back, so I'm going to do this frustration trade on bigger size. And then if that loses, then I'm really going to go crazy.
Yeah, it sounds like, you know, you've either witnessed it or lived it. And,
I've lived it.
I mean, I have to admit it. You know, everything you're talking about, as irrational as it is, emotions aren't rational. And you know, and I've done most of that stuff. So we're looking at bonds, and you know, I want to start talking a little bit about what makes something actionable for you. You know, we talked about just now people forcing trades, right?
Yeah.
For me, the market has to be giving me such a compelling reason, and usually that includes more than one reason, a confluence of reasons, like a great attorney going into court with a lot of evidence instead of just one piece of evidence like a moving average.
Right.
That if I didn't take the trade and saw it work, it would be more painful to me than taking the trade and getting stopped out.
That's a good way to think about it. The way I think about it is any trade that I'm thinking about doing, I ask the question, do I want to lose money on this trade? How will I feel if I lose money on this trade? And the answer has to be, you know, I feel that it was a good setup. It just didn't work out. If I look at something, and this of course means that there are good setups that I end up passing on that end up working out, and I also can't be frustrated about that. You know, that's another psychological thing. When you see a trade where you did the analysis and you passed on the trade and it worked, that can be very destabilizing. But I just have to, and for me, it's actually quite simple. I think one of the things about my work is that I have obsessively drilled down to quantify the places where I can find a trading edge. And so what this means is that a lot of things that people talk about, you won't find in my work at all. I have not used a Fibonacci ratio in well over 12 years. Not a single ratio on a chart. And I know that's almost universal. And I know every time I write or talk about Fibonacci, I get a lot of hate mail from people. But you know, for me, there are 2 points. One is that I could not verify the edge, and every test I've done of Fibonacci, I haven't been able to find that it's any different than a coin flip. And then the second thing is that I don't need it. You know, for me, navigating markets with very simple patterns that are based on everything to me is a variation of the pullback concept. The market makes a strong move, and then what happens after that move? We're looking at bonds here. It's a little bit hard to see on the daily.
Let's punch up to the weekly. Maybe a couple of things that what you're thinking and what people are reading. You're looking at bonds. It looked like you had a candle that might be a continuation candle after a flag. Are you negative bonds here now?
Yeah, we're looking at shorting bonds, and the idea, the trade is really driven by what you see here on the weekly chart, and it's this. Does my cursor show? I don't think I can draw on the screen. Okay, so this thrust down, which we might also see quite clearly on the monthly chart, but this thrust down generates enough momentum that then we watch for the character of the bounce. And if we get a kind of reluctant bounce, then, yeah, and there, you know, I'm using subjective terms, but it's quantified, you know, then we look to short new downside momentum. And one of the things that I'm doing here is measuring each bar as a standard deviation of the previous 20 trading bars. So we're looking for, and you can see over the past couple years, on this weekly chart at least, the preponderance of momentum in bonds has been to the downside. Yeah. And we would have had, you know, if you're looking at other setups, you would have had the same thing back at 2017 beginning, and this would have been at best, you know, a break-even trade. You probably on the weekly chart that would not have been a profitable entry, but you can trade within the daily on that. So I think short bonds is one of the ideas that's very attractive right now. Knowing what to stay away from is important, and I think, you know, precious metals right now to me are very neutral. And maybe it's a strange thing to say, but one of the other things that, yes, yeah, very, very much like the euro, and like the dollar. You know, I think I'm not crazy about the dollar index futures.
How about crude, Adam? Because we're starting to run short. That was the first chart that you showed. You know, it looked like we made a breakout. Some of my favorite trades are people thinking you have a breakout over a double top and then closing back underneath it is the failed breakout.
Yeah.
What are you seeing here?
Yeah, there's a little bit of longer term history. We've been bearish for years on crude oil and been right. And then in the middle of last year, so in this area, started to see some pretty bullish signs. And so we've had a couple flip-flops so far this year. Had a short setup through here, and this led to a small winning or break-even trade. But now this is one of the best trade setups I've seen in a while. And so what we're looking at here is, as you said, the combination of the breakout above this level, the flag setting it up, and there's a lot of ways you start to see a lot of overlap. This is a cup and handle type of formation. This is.
It looks like if the breakout holds, we could see $75. Is that what
I'm always a little bit hesitant to project price targets, but I think we could see an uptrend that continues for months and months and months, and 75 or higher would be well within striking distance.
I really appreciate you taking time today, Adam. You want to show your website one more time and tell the people that are here the best way to reach you?
Yeah.
And go ahead.
Go to marketlifetrading.com. I have a massive free trading course, and it truly is free. It's 24 hours of video, ton of PDF exercises. I also have a couple paid services that are aimed at both stock traders and currency traders. I'd love to have you check those out. But the website and the course is free as much as anything. I'd love to have people check that out. You also can find my blog, which is adamhgrimes.com, and there's literally hundreds of thousands of words that I've written over the years, and you can see right here on your screen combination of quantitative and more subjective, more performance-oriented things. And you also can get in touch with me through the blog. You also can follow me on Twitter at AdamHGrimes, and I do my best to be accessible to people. So if you message me and I don't answer, I apologize for missing your message, but hit me again in a couple days. And Dale, I really appreciate the opportunity to interact with people here and to do this interview. So thank you.
You're very welcome. Thank you for edifying F.A.C.E today, Adam.
Thank you.
You're now my trading warrior brother. I hope that every written word and every spoken word that you share with your mentees helps pips and dollars rain down on them. Thank you for bringing a realistic viewpoint to the business of trading, that it's not all blue sky, that it really the secret to trading I get from you is hard work and perseverance.
You got it. Absolutely.
All right, my friend. Thank you. That's Adam Grimes, everybody. I encourage you to follow him. Thank you, Adam. We'll have the video out in a couple of hours. Good hunting, buddy. Nice to have met you.
Same to you. Good day.
Okay. That's it. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings, and I'll see you tomorrow.